Hello and welcome to Gold and Silver Assets. It's Sunday the 22nd of November 2020. How will you know when it's time to sell your gold? This is a really important topic because many people tend to spend a lot more time considering when to buy than they do about planning their selling points. I think that the decision should be based on three main factors: technical analysis, fundamentals, and human psychology. And in today's show, we're just going to concentrate on the human psychology aspect. As you'll see a little bit later, I had quite a bit of fun with Photoshop software for this show. In last week's show, we discussed this concept. Bull markets are born on pessimism, grow on skepticism, mature on optimism, and die on euphoria. And we came to the conclusion that buying should occur mainly during the pessimism and skepticism phases, and the euphoria stage should be considered as a time of stage selling. That's all well and good, but how do we know when we are in the euphoria phase? After last week's show, a few people were concerned that we recently saw the euphoric phase completed for gold and the miners. My answer to that is that it depends on what timescale you're talking about. This chart is gold priced in US dollars on the 4-hourly scale, and it could be said that the pessimism stage occurred here in March and the euphoric phase occurred with this steep rise up here in July and August. Certainly, there was quite a bit of buzz around gold and there was quite a lot of excitement even in the media. However, it does depend on what timescale you're talking about. I believe that was just a mini euphoria, and euphorias can occur at different timescales and of different magnitudes. Here we have gold priced in US dollars on the monthly scale, and we can see that gold just broke out to new all-time highs over here. And that was the cause of what I think is more of a mini euphoria. This point here in 2012 marked the end of a euphoric phase, and that led to the pessimism phase over here. The breakout above 1400, I think, marked the start of the skepticism stage, which I think we're still in on the big time scales. If we therefore assume that gold is closer to the start of a bull market, which I believe we are, than it is to the end, then we still have quite a way to go. And if that's the case, what can we expect to see during what I call the macro gold euphoria, which is going to occur much further up in this direction? Well, here are a few of my ideas. Firstly, I think the mainstream media will absolutely love gold. They won't have anything negative to say about it, and there'll even be special sections dedicated purely to the precious metals and miners. You'll also get lots of gold-related ads in the newspapers and on television. Rick Rule is the president and CEO of Sprott US Holdings, and that's a billion-dollar company. For years now, he has very generously given his time to be interviewed on really small YouTube channels, some of which only get a few hundred viewers. When gold hits euphoria, I think that's going to change. Rick will be a regular guest on mainstream TV shows and will be treated like royalty. In fact, outside of the tiny gold community, I think you'd be hard pushed to find anyone who's even heard of people like Rick Rule, Peter Schiff or Mike Maloney. Of course, if you asked any random person about the Kardashians, they're almost certain to have heard of them at least, if not know their lives in great detail. In the euphoria, the gold guys will become more like celebrities as well, and they'll even be household names. If it ever gets to the point that the gold guys are making reality TV shows, then that's a sure signal to sell, sell, sell. The internet can also give us a few pointers. Let's look at Google Trends, and here I've shown the search volume for the term gold investment. Isn't it interesting how this peak over here corresponds to the peak price in gold in 2012? Now, the other interesting thing is that during the bear market, search volumes had dropped dramatically and remained low. This scale on this chart is not absolute, it's a relative scale. And so what they've done is wherever the highest search volume occurred is marked as 100 and everything is scaled relative to that. Where are we now? Well, we're currently half of the search volume that we were in 2012, which again fits with the idea that we're not really in a full euphoria yet. I think when we reach the macro euphoria, it's going to far surpass this peak and make new highs. And this part of the chart will almost probably be a flat line. YouTube stats can also be a useful indicator. For my little channel, last week's video got 3,848 views. And we also got 360 likes. Also, the channel just cracked over 6,000 subscribers. When the mania occurs, the stats might look more like this. We're looking at over 6 million views over here and over 100,000 likes and over 2 million subscribers. Yay! Of course, there are always going to be some thumbs down. There's always some grumpy so-and-sos, but some things never change, eh? Anyway, that reminds me, if you are enjoying this content, don't forget to hit the like button because apparently it helps with the YouTube algorithm. Conferences about gold and mining stocks will be hugely popular. At first, there'll be standing room only in the conference venues. Then they'll have to move to bigger and bigger venues to accommodate everyone that wants to attend. For years now, you could attend gold conferences, and it's not uncommon for mining stock CEOs to be manning their exhibition stands and walking around the conference venues. And it's usually easy for attendees to go up to them and chat to them. In the mania, however, it will be a different story. It'll be hard for the general public to get anywhere near senior mining executives. And instead, the companies will hire supermodels to stand at their exhibition stands. So I guess you could call it a kind of looks indicator. So the better looking the people at the stands, then the closer you are to the selling point. I once heard Rick Rule talk about how during gold bear markets, very few people were interested in talking to him during the breaks, and he could visit the bathroom in peace. However, at the height of the last bull market, loads of people wanted to catch him during the breaks, and some would actually go as far as to follow him into the bathroom to talk to him. So I call this the Rick Rule bathroom indicator. If you see a queue of people following Rick Rule into the bathroom, then start thinking about selling. During the euphoria, new mining stocks will come out of nowhere and listed mining stocks will multiply. In the last uranium bull market, the number of uranium stocks actually went from something like 30 to hundreds. There'll be pump and dump schemes that become much more prevalent. There'll be more and more gold mining stocks that enter the main indices like the S&P 500. Valuations will reach dizzy heights and fundamentals will no longer matter. Got a bad drill result? That doesn't matter. The price can still go up. And everyone will be chucking money at mining stocks. One of the classic features of euphoria is the enthusiastic involvement of retail investors. Precious metals and miners will be among the top stocks on Robinhood. As prices rise rapidly, you will hear stories in the papers about people who have mortgaged their house to invest in gold and mining stocks. Of course, if your Uber driver starts giving you hot mining stock tips, that's a sure sign of the euphoric phase. I don't think we've seen any of those things yet, and that makes me think that the major euphoric phase is yet to come. This might all sound a bit jokey and frivolous, but remember, crazy stuff happens during manias. And I actually believe a lot of this stuff that I've spoken about today could realistically happen. The problem is going to be that this doesn't all happen at one specific time point. It is a process, and it won't tell you exactly where the top of the market is, but it will start to give you signs of when to start at least thinking about selling in a staged manner. Next up, the market update. Let's start with gold price in US dollars on the daily scale. And this has been quite a long correction. It's been around 3.5 months, but I think it's fair to say it's been relatively gentle. It's almost sideways, really, isn't it? Anyway, I think we're coming close to the end of this correction now. Not much further to go. Where is the bottom going to be? Well, nobody knows for sure. There's two possibilities that I've been talking about, and that's not really changed. So one is over here, which is around $1,825. And then the other possibility is that it pokes down below that. And then we're looking at it entering this very, very strong support zone over here, which dates back to 2012. And of course, we've got this 200-day moving average over here, which is approaching 1,800 US dollars. So there's not much in it. This is our buy zone over here. And within that, there's about a $40 difference. And so which of those is it going to go to? I don't know. I'm still going for the 1,800 US dollars, but let's see. But as I said, I don't think there's a lot further down to go from there. I think price is going to turn around after that. Let's move on to silver in US dollars on the daily scale. And last time we'd drawn this trend line, price had dawdled along that trend line and then finally broke down a couple of days ago. So we're below that trend line there. And we've got a bit of a bearish candle over here as well. So if we get the next candle as a red one that closes below the body of this candle here, then I think again we've got more downwards movement. Certainly we're in a short-term downtrend over here. With this one, how low can it go? There are a couple of options. One is by joining these two previous lows, which will give us a target of around 23. If it goes below 23 and we look back here, there's not much support below that. And so I think if we drop below this trend line, there's a potential for quite a large drop here, either to the 200-day moving average, which will be about $21 over there. And at an extreme, it could potentially go down to here, which is about $19.50-ish. And the reason that comes up is, first of all, we've joined these two lows over here, and that brings us down there. But also we've got this line here, which is very, very strong support, again dating back years. So that's the absolute lowest. Whether it gets to that remains to be seen. If price were to drop to, in gold, 1,800 US dollars, and in silver to this level, then we're looking at the gold silver ratio actually going up to the mid 80s, which is still within the realms of possibility. So the price to watch here is $23 really. And as I said, there's a bit of thin air below that, so watch out for silver. And let's move on to the GDX, and this is on the daily scale. And we were talking about this channel here, which is a downsloping channel. One possibility is that this is a flag, but to me this is going on for quite some time, so it's quite long for a flag. The other thing is that it's tested the bottom of this flag quite a few times now, whereas it hasn't spent much time at the top. And we have been approaching the bottom of that flag, haven't quite reached it, but we're almost there. Price just bounced off of this 200-day moving average over here. Of course, if gold and silver start turning around before reaching those targets I mentioned, then of course, yes, this can steam up and go back above here, but it's looking less and less likely. The line to watch is a break of this line over here. If we get a break of that line, we do have strong support at 32. Now, the slightly odd thing here is that if we do break down from this channel, then one way of determining a target price is to look at the height of this channel and then extend that downwards. And that would give us a target of around 28 over here. But that would seem a bit strange because this support level should be very, very strong because, again, it's been going back for years. So I'm not sure about where the bottom of this is going to be. And, of course, now we've got gaps both below, so we've got one over here, and above, and we've got a huge gap over here as well. If the gold price does drop, as we're expecting, I think anything that's below this 200-day moving average can be considered cheap. And I think when this takes off, it's going to take off big time. So you don't want to wait too long for this. And finally, let's move on to the silver junior miners chart. This is the SILJ on the daily scale. And we had drawn these trend lines, which are parallel lines, and last week we'd drawn this line, which again broke a couple of days ago as the silver price broke down. And interesting, what happened here is that price broke below that and went back up to retest that line above it, and that ended up being significant resistance, and price got slapped down from there. And that again makes me think, if we get another red candle on Monday, that this is going down. And for the silver juniors, we haven't actually reached that 200-day moving average. And looking back here, we've got a fair amount of support here at 12 and 11. I'd call that the kind of support zone over here. And then after that, price is probably likely to turn around, depending on when the silver price turns around as well. So we've got a few target prices to look at there. I've also got these charts up on the website. That's it for me for this week. All the best and see you next week. Bye.